Boy, that time flies when you're having fun, doesn't it? It's about that time of day again here, folks. It's Tuesday evening. It's February 26, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help new traders earn consistent, reliable, dependable profits every morning using a simple three-step trading strategy that we teach and trade together in our trade room. But my goal tonight is to identify the best opportunities we see setting up for tomorrow, Wednesday's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and euro in tonight's video newsletter. Now, I'm going to start off tonight with the oil market because the oil market looks like those bears might just be done right with this market right now. We started off today on the oil with a nice strong trend down, as you recall, right from last night's newsletter. Strong move lower. But I'll tell you, after seeing these sellers try once, try twice, they even tried a third time, and you can see those buyers, they were waiting down there to buy this thing right back up. Now, at this point, it looks like these sellers are done with it. So now it's up to me to start looking for ways to become a buyer. Usually when we see a bear market reverse, we usually get that 1, 2, 3 reversal on that short covering rally. And if you watch my newsletter, you know exactly the setups now that we're looking for to capitalize on that move as it tries to go all the way back up and retest those highs. I'm going to talk about a couple different opportunities I see, both if the market goes higher and if these bears still keep trying to run back down to those lows. So make sure you stay tuned for the crude oil chart as we dig into this video newsletter. Over on the S&P tonight, S&P tonight started off as a bear market on the way lower. But again, as those sellers tried once, they tried twice, they lost their grip. Well, after the bears lost their grip, the bulls couldn't finish the job. And so with the bears failing and the bulls now failing, we find the moving average going sideways. I've got rising support. I have falling resistance. It's a range. Now, anytime I see a range-bound market, the key is to use expansions. I take that range, I find resistance, I find support, and my goal here for tomorrow is to buy off the low, sell off the high, stay away from that middle, and we're going to put together all the entry patterns with precision entries and exits, right, for tomorrow morning. Over on the Nasdaq is very similar to the S&P tonight, right? Nasdaq, much like its sister, the Emini, started off with a bear trend today. But of course, after trying once and trying twice, those buyers, right, took control. More like the bears gave up control. But again, the bulls couldn't go back and retest the high. The bears fail, then the bulls fail. That means we have pretty much a neutral momentum right now. Moving average going flat. I've got lower highs. I've got higher lows. It's a triangle. The most important aspect of a triangle is to watch the edges. So we're watching these edges here, right? The edges of that triangle tomorrow, buying low, selling high. And I'm going to show you guys my favorite patterns to trade with these triangles in just a moment. Over on the gold tonight, boy, gold, just like the previous charts we've talked about, we see a number of tries and failures here on the gold. It's no doubt we are a definite bear market at this point. There's a lot of bearish momentum in this market. But as you can see, though, as of that most recent lower low, the bears tried once. They've tried twice now to be able to retest that low, and they are struggling. Now, after I see those bears try twice, and then I see this strong break higher, that tells me these sellers are getting out of Dodge right now, and the buyers have their chance to take control. There are two basic scenarios I'm looking for here on gold. One is the short covering rally going higher, and we'll talk about the best types of entries on short covering rallies. But also, too, I hope that we get another move lower because we have a rising support trend line. And with that rising support trend line, there's one pattern I'm looking for down there to hopefully get that buy going right back up, right, to retest those highs. So I'm looking for longs on gold. I know it seems a little bit crazy right now, but longs look pretty good on gold right now going into tomorrow. And then, of course, over on the euro, finally got that big breakout we were talking about in last night's newsletter. We started off today's session a lazy bull run higher into a real tiny short-term trading range. But you'll notice the 1, the 2 try failure, and then bam. Now, I'll definitely give my buddy my buddy Powell the credit for pushing this thing higher, right? He talked about, of course, leaving interest rates low, which is, of course, bad for the dollar, which is good for the euro, right? So, of course, that's what's leading to that euro, right, jumping higher. We call this a 1, 2, 3 breakout. And so now I'm looking for hidden channels, and I got my eyes on 2 particular levels on this chart, 1 and 2, and we'll walk through 3, maybe 4 different entry patterns I'm looking for here on the euro. So we're definitely locked and loaded here for tonight. We get a bunch of 2-try failures and potential reversals on a lot of these markets. Before we jump into those charts, though, I want to make sure you never miss another great video. And to do that, go right over to our blog here at Sideways Markets. I'll put all the links in the description of the video, and make sure you join our mailing list. All I need is your name and your email address, and then hit that subscribe now button. And then before you go further, check your inbox, because I'm going to send you a very special welcome email with all kinds of goodies in there so you can get the most out of our time together here at School of Trade. So make sure you never miss a video by joining our mailing list. That way you never miss a beat. And don't forget, tomorrow morning we'll be in our trade room at 8 o'clock Eastern Time. And if you can't be there with me, the next best thing is to download all the charts that you see me using in tonight's video. To get access to all the same charts that I'll be using tomorrow in our trade room, again, I would love to have you there with me tomorrow morning at 8 o'clock Eastern Time. But if you can't be there, I understand the next best option is to grab those charts. There's a big button right below the video tonight on our blog to download all of those charts so you're ready for tomorrow. And while you're down there, if you have any questions, any comments, any feedback, or any additional videos you want to see me cover, drop that in the comments section below. So if you have any questions about the strategy, the plan, or anything in between, drop those questions in the comment section below. And don't forget, you can always pick up the phone and call me in the office. We have a toll-free phone number, and we have live support in the upper right-hand corner. So don't be a stranger. I'm always here to answer the call. I always enjoy talking to new traders, and I look forward to helping you every step of the process. But let's not waste any more time tonight, though, right? We're going to jump in here. Got a lot to cover here tonight. I realize I'm a little bit late to the video tonight, so let's jump right in. Tomorrow is Wednesday. My job tonight is to get us ready for tomorrow's trading session. Now, as you recall, we talked about this in last night's newsletter. We are squeezing out the last few drops of the month of February. And the one word that comes to mind at the end of the month is volatility. Markets do tend to get a lot more volatile as we go into the end of the month. Combine that with some big news in the schedule tomorrow, and we are expecting to have another great trading session. We've had a great month of February so far. I have no reason to think we're not going to finish up strong on Wednesday and Thursday this week. Now, I was keeping a tally in last night's newsletter of all the major news events that we have coming out here this week. Tomorrow, Wednesday, we've got 3 big headlines for tomorrow. First of all, before we open up in the U.S., we've got the very important UK Parliament Brexit vote. Now, I don't think anybody is really expecting that to go very far tomorrow, but I always believe in miracles, right? Who knows? We could see a surprise tomorrow, right, from the House of Commons. So we definitely are looking forward to that if you are a London session, if you're in Asia, if you're in London, or if you're a night owl here in the U.S. Definitely keep an eye on that, right? That'll probably be 4:30, 5 a.m. Eastern Time. Then once again, we have the second day of testimony from our Fed Chair Powell here in the U.S. Now, this morning was day number 1. Day number 1 is always the nastiest. It's always the jumpiest. It's always the most impulsive. Tomorrow will likely be a bit of a yawner. It's not going to be as new and interesting as today's environment was, right? Today was the first time we heard his testimony. Tomorrow he'll read the statement again, and he'll finish up answering all these seemingly foolish questions from these clueless politicians, right? So bottom line is another round of Fed chair tomorrow, but probably won't be as crazy as it was today. But of course, all of these things tomorrow take a back seat to what I think everybody is going to be watching. And that is the Trump, right? That Trump and North Korea's Kim Jong-un, they've got their summit number 2, right, in Vietnam tomorrow. And of course, I'd be lying to you if I told you I wasn't at least a little bit curious, right, how that's going to go. Now, we're probably not going to get much on that until later in the session. In fact, I've been told that Trump and Kim Jong-un are probably not going to even be in the same room until late afternoon. That, of course, is in Vietnam. So it's probably not going to be until mid-morning tomorrow, right, that we're probably going to start hearing for, in the U.S., mid-morning tomorrow, that we'll start seeing headlines, seeing images, and who knows, right? Hopefully getting some decent reaction, right, to whatever those headlines say. Again, if you know both of these presidents, right, you know that anything can come out of their mouth at any time whatsoever. So I would be lying to you if I said I wasn't excited to see that tomorrow. I think everybody is a little bit excited, right, to see what happens, right, tomorrow morning from the Trump, right, Kim Jong-un, right, summit number 2. Then, of course, right, we look at the rest of this calendar tomorrow, and we actually do have some more to talk about here. Tomorrow we have the international trade number at 8:30. Then we've got that Jerome Powell speech, right? The testimony. It's not a speech, it's a testimony tomorrow at 10 o'clock Eastern time. And the reason why I say it's a testimony is because testimony is a big difference between a speech, right? Fed speakers will speak at conferences and different events. Testimony happens under oath in front of very serious people. It's a much different environment. That's why I say it's not a speech. It's testimony twice a year, right, on Capitol Hill. Once in the spring, and of course once in the fall towards the end of the year. And then don't forget, if you're an oil trader tomorrow, oil traders, we've got the petroleum status report at 10:30 Eastern time. So remember, really after 10 o'clock tomorrow, oil traders, right? 10:30 on Wednesday mornings is your weekly inventory report. My cutoff on Wednesdays is always 10 o'clock Eastern time. I'm not a big fan with messing around with oil after 10 a.m. But the good news is that the trading strategy that we use in our trade room, it works in all the different markets. So if oil's not moving for us after 10 o'clock, or if I don't trust the price action after 10 o'clock, I can always make that move right over to other markets. So we got international trade at 8:30, Powell at 10 o'clock, right? Petroleum status report at 10:30. Those are the big milestones tomorrow. Brexit before we open up, and of course, right, the Trump, right, the summit in Vietnam, right, later on in the morning. So going to be a busy day tomorrow. Let's not waste any time here tonight. Let's jump in now and take a look at these charts. Looking at oil here right now, right? There are 3 big clues here right now on this oil market. The first big clue is this bearish momentum. It's not a bull market right now. We can be very, very clear on that. This is a bear market. In a bear market, we know that sellers are going to try twice to retest those lows. In fact, you can see in this, they try once, they try twice. In fact, they tried a third time. So the fact that this bear momentum, right, is now shifting now to bullish after that third try. And again, usually it only takes 2 tries, but apparently those sellers were go-getters here today. So now that we have, right, now that we have that bull momentum shift, now we can start looking for buying opportunities at levels of support. Now, where can I find levels of support here? Well, I've got a bull channel. And this bull channel may or may not hold very long. A bull channel tells me to look to buy the low of that channel. It also tells me that if we break through the top of this channel, we may see a 1, 2, 3 breakout. And if that's the case, we can look for another channel as we go higher, right? The last clue here is definitely an important one, and that is this trading range. You know, it's definitely easy to see this market spent most of its time rattling around inside of this range. The bears tried to keep selling it. But again, after a while, though, if those sellers are unable to retest that low, we start seeing a little bit of desperation. We start seeing exhaustion. And it looks like that's exactly what's happened because of that big green candle. It might be because of the API report as well, but it looks to me like these sellers have given it a lot of attempts here to sell off those highs, and it looks like they're now failing. So really at this point, I'm looking for a couple different scenarios. One, I'm looking for a pullback to the low of this channel. The second one would be I'm looking for a run higher as we go. And as we go higher, this will probably turn into one of two scenarios, either a very strong short covering rally or into a new spike in channel. And we'll put both of those plans together. Well, let's do it right now. So as I zoom into this chart right now, we know the market has bullish momentum. We know we have a relatively shallow trading channel, and we've got that trading range. The first thing I'd like to do is get this market to pull back. If I can get this thing to pull back, my job becomes a whole lot easier. Get the market to pull back now. Let's get back below that moving average. If I can get below the moving average, I can look for one of my favorite patterns, which I call a two-try failure. The sellers push lower, that's the first try. Then I'll wait for a pullback to the moving average, and I'll look for the sellers to try a second time. Once I see those sellers try twice now, below that moving average, now I know the sellers are fully committed to this move. But the most important thing is I now know exactly where their stops are. In other words, I know where those sellers start experiencing pain and where they're going to have to either get in more or close their position and let the market rally. And that sets up ultimately, right, for a failure setup. And that failure pattern will trigger as soon as we break and close above that moving average. So the first pattern on the pullback is called a two-try failure pattern. Now, what is always very interesting about these failures is that there are usually a couple sellers, right, that will hold on. And as soon as the market pulls back, those sellers will then take that opportunity to get out. It's not a very responsible way to do it, but a lot of sellers who don't get out on the initial stop run, they'll wait for that next pullback and they'll get out then. It's a way of preserving capital. Not a very smart idea if you're a rookie trader, so don't even try it. But a lot of experienced traders will do that. Now, what happens when sellers exit their short positions? Price rises again. And so that sets up now for a follow-up pattern, which I call a breakout pullback pattern. So again, if we get that pullback, I'm looking for that two-try failure. I'm then looking to buy into those last-minute seller exits, right? Up and then back down and buy from there on that breakout pullback. Now, that is kind of the ideal scenario here. What if price keeps pushing higher though? What if we don't get that pullback? What if the market keeps running higher? Well, these are two scenarios that we definitely want to be ready for. The first scenario is what happens a lot when a market reverses after a big run lower, right? Big run lower, 1, 2, jump, short covering rally. Now, short covering rallies have potential to be very, very strong, especially with tomorrow's big news coming out early in the session. So if we do see the market start to really sprint, right, as it goes higher, you've basically got two opportunities. If the market really starts to run, right, on a short covering rally, the first pattern I always look for is a trap, right? Trap patterns, the key is you've got to get into them early. Okay, so that's the key. If this thing starts to tear going higher here for whatever reason, I know now I've got to get in early, right? Got to be quick. When we start tearing, you want to wait for that little trap low and look for a trap entry pattern as we go. Now, very important, if we don't get that trap, if it keeps on running and keeps on running and keeps on running and we don't get that pullback, in other words, if I wasn't able to get in early in that move, I don't want to chase after it. At that point, I have to look for a deeper pullback. And what I'll do is I'm going to start looking for a hidden channel. I'm going to mark up these new highs, mark it up of the low, and find the low of that channel. Once I get the low of that channel, then I can look for that same sequence, that deep pullback, that two-try failure into that breakout pullback setup. Okay, so remember, if you're going to get in as the market goes higher, do it on traps and do it early. Because if you get too late, right, if you wait too long, it will eventually get too high to be aggressive, and then you want to wait for the deep pullback. So think of it this way. When it comes to a short covering rally or any type of reversal, it's traps if you can get into it quick. But if you can't get in on a trap quickly, sometimes it doesn't pull back for you. If it just keeps on flying up, stay patient, wait for the pullback, right, and buy that two-try failure. And then, of course, into that last chance exit, that breakout pullback for the buyers. Now, how do we stay bearish now? We've talked a lot about the bulls here, but let's be honest. That big move down, maybe I'm wrong, right? Maybe we're bearish. How would I know that I'm wrong and we're bearish? It's very, very simple, guys. All the sellers have to do is go back down to retest that low. If they go back down to retest that low, we're no longer even thinking about being a buyer anymore. In fact, if they go back down to retest that low, this basically becomes one big range. And we'll continue here now to use that same range strategy we always do, which is the 1-2 failure pattern. So the sellers, all you got to do is go back and retest that low. If they get a retest of the low, then all of this is a moot point, and we now focus on a 1, 2, and we sell back down above that range. What's going to happen tomorrow? Who knows? Got a big news event tomorrow morning. We got big news at 10:30 for the inventory report. Grab your popcorn. It should be an interesting session tomorrow on the crude. Now, over on the E-minis. The S&P and the Nasdaq, they're very similar tonight, right? Very much the same here. There are some ranges, some triangles, and whenever you think about a trading range, I always think about expansions. Whenever I think about a trading range, I always think about expansions. What I mean by that is whenever I find a market trading inside a range, whether it's a triangle or a rectangle, what I'll do is I'm going to take that range, I'm going to find levels of support and find levels of resistance overhead. To do that, size of the range, copy and paste it up, size of the range, copy and paste it down. What that does is it creates levels of support below us and it creates levels of resistance above us. Now, once I have those levels of support and resistance, those are my go-to levels. And I use them in combination with two types of patterns. One would be a major two-try pattern, and the other would be a nested two-try pattern. Now, I go over all the details of these patterns in a free trading course. What I'll do is I'll put a link up top here for you. That way you can get a deeper dive into all of these patterns. I'll also put a big red button below the video tonight on our blog. So in the upper right-hand corner, grab that little information icon up there and register for the free trading class. That way you can learn more about these two different types of patterns. For example, we have a major two-try, right? One try, two try. If I can type here right now, right? One try, two try, and then back down into the range. Or we have what I call a nested two-try, right? Which is basically a two-try inside of a two-try. And I use those in a lot of different variations of different market structures. And again, you'll learn more about those inside that free trading class. So here's the key. Anytime I see a trading range, I find my support and resistance using expansions. Then I look for that 1-2 try failure pattern. There are two types of failure patterns. There are the majors and there are the nesteds. And we'll talk more detail of that about which is which, right, in our video classes, like I mentioned before. That free class talks all about it. For example, right, here's a major, 1 and 2, back down in. You can go inside of that though. Look at this one. 1, 2, there's a nested. So there are lots of different ways you can use, right, these two tries. Okay, so now that you know the basic idea, right, I've got my trading range right in the middle. I've got some rising support coming over. I've got falling resistance coming down. Not the end of the world. Those trend lines are not going to make too big of an impact because I'm not trying to sell low or buy high, right? What I'm going to do is I'm going to use that trend line in combination with that range expansion level. Use that trend line in combination with those range expansion levels to buy those lows and sell those highs. So as I go lower here, I'm looking for that 1, 2 failure. As I go higher, I look for that 1, 2 failure. Again, depending on the specific market conditions we see when the market breaks down, we'll look for the major or the nested 2 try. So for example, if I get this stuff out of there, right, I've got my trading range. Trading range tells me stay away from the middle. Don't fiddle with your middle. We're going to buy low and we're going to sell high. I've got that range expansion 1, range expansion 2, range expansion 1, and range expansion 2. Very, very easy pattern. This is first try. We pull back to the moving average. The sellers try a second time. We now look for that nice strong signal and we buy it going back up. We go back up. The buyers, of course, now try to buy the pullback. They try once, they try twice, and we sell it back down into that range. It's that easy, guys. Trading ranges are actually very, very simple patterns. The challenging part is when we don't take the time to identify as a range. It's very common for rookies. I did this all the time when I was a rookie. It's very common for rookie traders not to do their due diligence to understand what the market structure is, or what I call the day type, because then that tells you exactly what tools you want to use, right, for those market conditions. So we know we have a range-bound market, buy low, sell high. Now tell me, what does a breakout look like, right? How would a market break out? Does it just take a strong move? No, because I'll tell you right now, we can see plenty of examples here where strong moves were not enough to break these markets out. So how do we break out? Let's say, for example, we make our 1, we make our 2, we get our 1, our 2 try, and we go back into that range, right? Now I try to sell the high. We see 1, we see 2, and now I'll try to sell that high. But what if these buyers kept it going? Now we're talking. If we can get a 1, 2, 3 breakout, in other words, 1 is a strong move outside the range, 2 is a pullback to the moving average, and 3 is a strong move off the moving average, bingo. Now we have the 1, 2, 3 breakout, or the 1, 2, 3 reversal. They're very, very similar in that sense. Then what I'll do is I'm going to mark up that high, mark up that high, and we're looking to buy off of that low. So of course, once again here, same thing goes the downside, right? If the sellers can go 1, 2, 3 and break down, fine by me. We'll mark up that low, mark up those lows, find that hidden channel, and we're going to sell off the top of that channel. And which entry pattern would I use at the top of that channel? Probably a buyer failure pattern, right? Or maybe a bear trap. And you can learn more about those inside that free trading class that I mentioned earlier on in the video. So again, I want to buy low, I want to sell high, I want to use that 2 try failure, nested 2 tries, and major 2 tries. You can learn more about those in our video classes. Stay away from that middle and watch for the breakout. 1, 2, 3 breakout. Could easily happen. We got Powell back in the microphone tomorrow on Capitol Hill. It could easily break out of this sucker. No problem at all. 1, 2, 3. Mark up that new channel. Buy the low, right, of that channel using your sweet spot. Very, very easy pattern. We just have to wait for that potential breakout. So buying low, selling high, avoiding the middle here on the S&P. And then over on the Nasdaq is almost a carbon copy. I was going to say polar opposite. Carbon copy, right, of the S&P. We definitely have some neutral momentum right now, right? We get a trading range right in the middle. We know where our battle zones are. Now that you know where those are, right? So there's my trading range right in the middle. Okay, you can see that sellers were already waiting to sell off that range expansion. Now we have some additional range expansions down here, and boy, oh boy, would I love to be a buyer down there. 1, 2, failure. Or maybe we get a stronger move down, and it turns into a nested, a 1, a 2, and a failure. And again, I cover all the details of these types of patterns in our video classes. We trade them every morning in our trade room, and in that free class in the upper right-hand corner, we'll talk all about these as well. So now we kind of know the idea here, right, on the E-minis, right? Not a lot of difference between the Nasdaq and the S&P. 1 try, 2 try, back up. Once we go up, one try, two try, back down. Stay away from that middle and keep your eyes open for that 1, 2, 3 breakout. Mark up those lows, mark up that high, and we're selling off the top of that channel. Buying breakouts, selling breakouts, but only after we see that 1, 2, 3 breakout pattern. Because in case you haven't noticed, it's not enough to get a strong move outside of a range to call that a breakout. We want to fade those breakouts tomorrow morning in our trade room. And then of course, over here on the gold tonight, right? Gold, I'll tell you, I was really on the fence here tonight about the yellow metal. Let's swap this out here so you guys can see these things here. So gold has 3 big clues. One is it's very obvious this overall bearishness in the market right now. The second big clue is this trading range. And you can see how sellers are trying to sell off that range expansion. You can see that range is a bit of a bear bias to it. But I'll tell you though, I think this market's ready to go higher here because we saw a big move down. And you know, as you probably have heard me say many times before on this newsletter, anytime I see a strong move in one direction, we normally see a two-legged pullback and a retest of that low. But you'll notice they didn't get the retest of the low, right? They barely missed it. They came close, but they barely missed the retest of that low. So the bears, they tried once to retest the low. They're trying a second time now to retest that low. Now we have a rising support trend line in the way, and that's probably what led to this little short covering rally, right? A little bit of the, proverbial kind of throw your hands in the air and say, hell with it, right? The bears get out. The buyers now have their shot, right? And again, you see a market like oil we talked about earlier. I mean, oil tried 3 times before making its run higher here. So I'm definitely looking for a buying opportunity here now on this gold. I'm well aware that I'm going to be trading into a level of resistance. You know, we talked about expansions, taking those ranges, and then of course, expansion 1, expansion 2. Another way that I like to use expansions is I'll take the channel. Right? I draw my channel, and then I add this kind of channel expansion, right, on top of it. Now, a lot of folks like to use Fibonacci expansions. I don't get too wrapped up in that type of stuff. But what I do is, though, I'll use that channel, and then once I know I've got that channel, I'll just pop that trend line on, right? That way I know I have another level, right, of support or of resistance in this case. Now, we kind of talked about this already on oil, right? Very similar. I'm looking for the move either lower so I can try to capitalize on this rising support trend line. That's what I hope we get tomorrow between you, me, and the rest of YouTube. That's what I hope we get tomorrow. Or, right, we may see that short covering rally. And what did we say earlier, right? If you can get in early on a short covering rally, you're good to go. But if you can't, then you want to start thinking about a hidden channel here and buying that pullback. Does that make sense, right? So when we talk about a short covering rally, the most important thing is when I'm looking at a short covering rally, get in early on it, traps and failures, or you've got to wait for that deep pullback because eventually it will get too high for you to start buying, right? Buyers don't want to buy high. So what would those 3 different scenarios kind of look like here? Well, again, I'd like to see us pull back. Now, if we get that pullback, we might get a two-legged pullback. Two-legged pullback patterns are really, really great patterns here. And they go something like this. 1 leg, 2 legs. Now, that's pretty remarkable, huh? Pretty clever name, that little two-legged pullback, right? How many people did you hire to think about that one? I'm kidding with you, obviously. Now we draw the trend line down. Right? Now we draw that trend line down. I know, very clever name there. I try not to overthink this stuff, right? I'm not the smartest guy in the world. And now with that trend line coming down, I can use that trend line as a level of support for a buy. Again, I call these two-legged pullbacks just because there are 2 legs to the pullback, right? Leg 1, leg 2. And sometimes you'll see a 3rd leg, even a 4th leg. The bottom line, though, is usually if a market's going to stay bullish, it's only going to pull back 2 legs, right? Think of it that way. If a market stays bullish, it only pull back 2 legs. If it goes 3 or 4 legs lower, it's probably not a bull market any longer, and you probably don't want to be buying it. All right. So look for that two-legged pullback as we pull back over that trend line. Okay, that's the key there. Now, another option would be the same one I talked about earlier, right? We see the pullback lower, the moving average comes over. We see the sellers try twice, once and twice. We now know where their stops are. We then look for buying opportunities now on the failure, right? We buy into their failure. Now remember, we've got that trend line coming down overhead, so I don't want to buy into it. What I'll do now is I'll wait for that next, usually the last opportunity to get in on this before it rallies, and I'll look for that breakout pullback. Remember, that breakout pullback pattern is usually caused because sellers are still waiting to get out the next time it pulls back, right? That's what goes on. The sellers who are stingy, they don't want to get out yet, they wait for that pullback. Once it goes back to their point of entry, then they get out, and that's why you get that rally, right? That big rally afterwards. So we get the two-legged pullback, we get the two-try failure pattern, and we get the breakout pullback. Again, you want to learn more about these patterns? Upper right-hand corner, or again, that big red button below the video tonight on the blog, and you'll learn all about my favorite entry patterns. Now that we know what we're dealing with here, what is the market going to do if it goes higher here? There are two things you want to look for. One is going to be just a razor sharp, right, white hot short covering rally. Now, if we can get in early on this rally, we can do it with a trap setup, right? Trap patterns are great when you don't want to buy high. The key though is you got to go in early, right? You've got to be in that thing early. So, in other words, right, if this thing goes up, if it goes up, pulls back, up, pulls back, up, pulls back, no traps yet. Now we're way too high. I don't want to buy up here. Way too high to buy, way too high to buy. So instead of buying high, now what I'll do is I'll look to buy low. Not too low, but now I'll find a new hidden channel, right? Let's draw that up in a little bit different color. Let's draw it in red. Okay, my hidden channel. Now, a lot of times I can find prior levels like that level, like this level, and that becomes another spot for that pullback, right? So kind of keep your eyes going left and look for those prior major resistance levels, which may now be able to be used as levels of support. Then we wait for the pullback. I wait for the pullback now, the moving average will come over, and we'll do the exact same thing again. Right? It's the same basic structure or the same basic setup. It's that two-try failure into that breakout pullback from there, right? Into that breakout and then into that last effort pullback from there. Okay, so really great opportunities, whether or not we can get in early in the short covering rally or whether we get in late on that short covering rally. Just don't chase after it. Okay, that's the one thing we don't want to do is chase after it. Now, I've talked a lot about being a buyer here tonight. How would this market earn my trust back? How does this market become a bear market again? All it has to do is retest that low. If you can get back and retest that low, bears, I'll quit yapping about how much you failed today, right? If the bears get back down to retest that low, done, right? Bulls, done. And at that point now, we'll be back to being a range. And if we go back to those lows, we want to sell high, using that 1-2 failure pattern, that two-try failure pattern that you'll learn all about inside the free trading course, right? So really, really easy strategy, but the bears have to prove it to us. The bears have to prove to us right now that they can get this job done. Let's keep rolling. Let's wrap this thing up here now over on the euro. So the euro is a really good example when a short covering rally goes too far, right? You've got that jump up, 1, 2, run. We didn't get any traps up here, right? There were no traps up there to really buy low, and the market jumps. So now it's just a little bit too high to buy right now here on this euro. We got the breakout, had the trading range, got the 1, 2, 3 breakout. Wonderful. Now I want to buy low. I don't want to buy high. So what I'm going to do is we'll find that new channel down to that low, mark up that. Again, like I said, I always like to look left and find some areas where we had previous resistance that I can use as support, right? So I'll go use those areas now here as support and then look to buy the pullback from there. That's the situation I hope we get tomorrow. I also know that with tomorrow, with Powell speaking and with Brexit tomorrow morning, we may come in tomorrow and see this market going sideways. Now, we talked earlier about expansions and what the plan looks like, right, for a range-bound market. But let's kind of walk through that once again, because we've talked a lot about other things here tonight. So what if we end up going higher here, but we can't keep going higher? And we don't pull back. We just start going sideways across the screen. Well, the first things first is I want to find those range expansions. Find the range expansions below it and find the range expansions above it. The key one, though, is the low, because that low now is where I can look for the 1, the 2, the failure pattern, right? We call these two-try failures. Two-try failures and then back up into that trading range. You can see a great example of one of those right there, right? We go down, 1 try, 2 try, right back up, right? Another one right here. 1 try, 2 try, right back up. Another one here. 1 try, 2 try, right back up. Lots of different 2-try failures. And again, all you're trying to do is get below the moving average. So one scenario would be we pull back to the low of that channel. Moving average goes above. The bears, of course, think this market now is reversed, so they try to sell off that moving average. That creates the 2-try failure pattern in a trending environment off the low of this channel. And so with the low of that channel being right there, we now know we've got support. We've got the sellers trapped, and now we can buy into their failure. Now, of course, I never want to chase after it, so what I'll do next is I'll wait for the pullback, and we'll buy the pullback as well, right? These patterns are very, very common, right? 1, 2, up and over and go. You can see them happening over and over again if you know what you're looking for. So those are 2 really reliable patterns. But then also don't forget too, what if we get the 2-legged pullback? What if the market gave us a 2-legged pullback here? 1 leg, 2 leg, right? With my clever little name for that pattern, right? Then what do? Then we use something similar, right? We go up, over, and look for it from there. And you're absolutely right. This could easily be seen now as a combination of a 2-legged pullback into a 2-try failure into a breakout pullback, right? How about that? Wouldn't that be a dream come true? Probably not going to get all 3 of them at the same time, right? But we should be able to find at least 1, maybe 2 if we're lucky, right? 2-legged pullback, failure pattern, pullback pattern. Now, the tough one's going to be if the market goes sideways. And don't be surprised if it does, because again, we've got Powell tomorrow morning back in the microphone and of course, Brexit. So what do? We find that level of support. We find levels of resistance. I want to buy as the market goes lower. So I wait for the pullback. I wait for the sellers to try twice, and we buy it going back up into that trading range. Now, what about going higher? What could I do up top to buy? Well, I'm glad you asked. Anytime I have a breakout above the top of a bull range, I look for a very simple trap. 1, 2, trap. One of my favorite ways to trade range breakouts, going with the range, right? Going with momentum, not against it. Right? 1, 2, and up from there. If we see a very strong break higher, let those bears try once, let them try twice, and then look for those trap patterns to grab that, right? To grab that entry and run out those bears, right? Those foolish sellers trying to sell into the top of that range. That pattern is meant to teach them a lesson, right? You shouldn't be selling in a bull market, right? Even if it's top of the range. All right, guys? So look at some great patterns we're watching right now on this euro. Now, don't forget, always keep your options open. If we get a 1, 2, 3 reversal, mark up those lows, mark up that channel, and sell the high of that channel. Just because the market's bullish right now doesn't mean it always be. And I always need to keep my eyes open, right? And really keep my mind open. I remember when I was a rookie trader, when I was learning on my own many years ago, I would get so obsessed with the strategy I was trying to execute that I was missing all these really big important clues. So it's important that we have our plan, we have an opinion about what we want to do tomorrow, but there are certain times when things change, we need to change with them. Speaking of change, that really is the most important part of why our clients love our trade room. Because every morning We put together our plan at 8 o'clock Eastern time. Then we trade the plan together. If things change, we change with it. But our clients love the fact that we can get together every morning and do it together. That way, if you're brand new, I'll give you all the cheat sheets and the checklists, and we'll find those patterns together. And if the markets change, if news comes out, we'll change right there with it, and you'll have your finger right on the pulse right there with me, elbow to elbow in the trade room. All right, guys? So come out and join me tomorrow morning, 8 o'clock Eastern time. It's all part of our advanced membership package. Our advanced membership includes our beginner, our intermediate, all the cheat sheets, all the indicators, all the templates, everything you're going to need. I even toss in a copy of my trading journal on top of it. And we open up our trade room tomorrow morning with all of our advanced members. If you're not ready for membership yet, don't forget we get a great free trial here at School of Trade, right? Inside that free trial, you'll get a free pass to come join me as a guest in our trade room. And you'll also get our free trading class to teach you all about all of our entry patterns and really what it feels like to be a client in our trade room. And don't forget, if you have any questions, comments, or concerns, I always love to answer the phone and talk to my clients. And I always love to hear from you on live support if you're outside the country or it's difficult to get to a telephone. So keep in touch. Don't be a stranger. Tomorrow morning, 8 o'clock Eastern time. Don't forget, we get a bunch of news on the calendar tomorrow. And as always, if I don't see you guys tomorrow morning at 8 o'clock Eastern time with all the clients, I'll see you guys same time, same place tomorrow night on our next edition of our nightly newsletter. Guys, as always, my name is Joseph. Be well out there. Be nice to each other, will you? Thanks for tuning in, and we'll see you next time. Adios, amigos. Bye-bye for now.